In this video, we'll take a look at a few chart analysis to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. If you're interested in learning to read Forex like professional, check out our complete Forex course on Udemy. I have the link attached in the description below as well. I'm sorry I couldn't put out a video last week due to Easter. Had a very busy day, so we had to postpone until this week. Mind you, we'll be talking about the gold chart, crude oil chart, GBP-USD and EUR-USD in this week's video. Before we get started, I just want to say congratulations to all the Liverpool fans out there. I know they won the title today, which has been a sad to see. I'm not a Liverpool fan though, but congrats to you guys who are enjoying the moments right now. So let's get started. Excuse me, my subscription just got cancelled. I'm gonna subscribe back after this video. So let's just manage till this video is done. So this is the gold chart on the 1 hour time frame, and as you can see, we've been in a bullish trend for some time, and we seem to be consolidating around this area of value, which would be a confirmation, or which will lead to a confirmation of either a bullish continuation of this move or a bearish move to the downside. Before we look for price levels where we can continue the bullish momentum on gold. I don't see any reason why this bullish momentum ends now, but anything can happen in the market. Markets can be unpredictable sometimes, so you have to be open to both case scenario. So right now we have a very good low creating some sort of double bottom. You can also see on the RSI close to creating a double bottom on the RSI, but on the price definitely has made a double bottom. So what I'm watching out for is to see if price gets into this area of resistance, consolidates a little and gives us a bullish breakout to the upside, then this will be my confirmation to go long. It's a no-brainer, right? Confirmation to go long, stop loss is going to be placed underneath the consolidation list of the breakout. First take profit target is going to be obviously around these highs, and we trail our positions as we go higher. That's if this plays out like this. So this is my bullish case scenario. For my bearish case scenario, I believe you already know I'm going to say that will be waiting for price to come back into the support level, consolidate a little, and break through this area of value, which is a support level after a double bottom, right? So if this happens, then you want to go short here. Stop loss is going to be placed above the consolidation list of the breakout. Take profit target, first one can be around these price levels. But if you are skeptical as to whether price gets here, you can also take profits around these lows, right? This will also be a good price level to take profit, because sometimes bots and institutional traders can front run this target. So instead of price getting to this area of value, which is the obvious price levels to get to, you could see a reversal from a price like this, and we just missed your take profit target, right? So this is my brief outlook on gold for this week, right? So a lot of things could happen within a week, but this is what I'm basically watching out for on gold. I'm a little bit skeptical about going short, because there's a good chance we go down, we take out the support level, because the trend is still strongly bullish. The bearish momentum could turn to get short-lived, with price reversing to the upside and going higher. So that's something to watch out for. Potential fake out around this price level, something to watch out for. But I don't think we have any problem going long if we get a sustainable bullish breakout from this area of resistance. So something else to watch out for would be taking this trend line like this. So just give me a minute. So doing something like this across these highs. So this could also act as a guide to deciding whether you're going to go long or go short. So if you get to see price maybe hitting this trend line, going back down, some sort of consolidation over here followed by a good breakout, then this could also be a confirmation to go long, right? You could go long after this move with your stop loss underneath these lows if we don't get our lows, or underneath this one if this one happens. Then you just try to hold your positions as high or as far up as possible. That's the briefing for this week's analysis on gold. Moving on, we're talking about crude oil. So crude oil real quick, Crude oil real quick. This is the daily chart on crude oil, and we're still trading underneath this area of value, right? So we're trading underneath this area of support, and we'll be focusing on what's happening over here to see if we can spot our good trade opportunities for this coming week. So something very interesting is that I am only looking forward to going short on crude oil, right? Crude oil. So zooming in, so just don't pay attention to what you can see at the top of my screen. So we're going to be focusing on this price level. So we're going to be focusing on what we have over here, right? Over here, that's what we're focusing on. So zooming in a little, you can see that this pattern looks like a bearish flag right now. So it seems like a bearish flag is forming, but just that we have to be patient enough to see when that bearish breaker is going to finally occur to drive price lower. So it's a classic ABC pattern. So ABC pattern of the Elliott wave, A, B, C, right? If you understand Elliott wave, then you understand what I'm talking about. So what I'm simply watching out for is to see when or if price takes out this trend line, then I'm going to go short, aiming for lower price targets. So my entry is going to be immediately after the breakout, because right now this alone is a huge consolidation, right? So my entry is going to be at the breakout from this trend line. Stop loss is going to be above the consolidation, at least of the breakout. First take profit target is going to be around this area of value, which is a good area of support, considering we have 1-2 bounces of these price levels. And second take profit target is going to be around these lows. Then we can trail the rest of our positions as we go lower. This is a classic bearish trade setup on crude oil. Now, I'm not saying there's not a chance that we go higher, but I'm not just interested in going long right now on crude oil because we're trading underneath this area of value. So price could go as high as this, as the case may be, but I'm not interested in going long. I'm only interested in going short, and that's what we'll be focusing on in this video, because it is, in our best interest to look for short trade opportunity because of the way this market is structured, rather than trying to take any trade that comes our way just because we want to get in the trade. It's more logical to look for bearish trade opportunity in this kind of market setup. So even if we go up, forget about the trade, the other trade opportunities are there, focus on those and wait till you get a bearish breakout, because a bearish breakout from this current chart pattern or this market structure would signify a bearish continuation of this move. So a move down followed by a consolidation and another move down, and the ideal price target would be taking a measured move from this up down and plotting that against a potential breakout, which would be our next price level. So a potential move to $47 per barrel is what we're looking at for on crude oil, if we do get a good sustainable bearish breakout from these price levels. This is briefly for crude oil. Moving on, we'll be talking about GBP-USD. Once again, I'm sorry for this. So GBP-USD right now seems like a good bullish trend. Price creating higher highs, higher lows, as the case may be. So I'm just going to try something here. I haven't tried this before. Just going to see if this aligns with the resistance levels, right? So it didn't quite align. So we're going to be paying attention to this area of support along this bullish trend. So right now we can see price create some sort of head and shoulder pattern. So this is the head, right? We have a head here that's created from some sort of double top. We have the left shoulder and we have the right shoulder. Now, from patterns like this, it is logical to expect logical to expect some bearish price movement, right? If the neckline breaks, and the neckline is this blue trend line we can see over here. So I'm going to zoom in. Just going to zoom in. Excuse me. Okay, so I'm going to zoom in so we can focus on this area over here. So zooming in and so zooming in and adjusting our chart quite nicely, you can see we have a very good trend line, which is the neckline of this pattern right now. And for a bearish case scenario, it is logical to wait for price to come into this trend line, consolidate a little, and give us a bearish breakout to the downside. So if this happens, then your entry is going to be immediately after the breakouts, taking out the neckline. Stop loss is going to be above the consolidation, at least of the breakout. If you're okay with setting your stop loss over here, then that's fine. And it's because we may come down and break this trend line without having another consolidation here, and that will give you an approximately stop loss of about 80 pips. If you're okay with that, fine, but I wouldn't take a trade like that, because considering our take profit targets, that's not just a good risk to reward ratio in my opinion. So the best trade opportunity will be waiting for a consolidation if it happens, and your stop loss above that consolidation. So when you go short, your first take profit target obviously is going to be within this area of value. Second one, if we do continue to drop, would be on this trend line, right? This I'm going to trade GBP-USD in a bearish case scenario, right? There's also a good chance we don't break this neckline. There's a good chance you take this trend line, plot it against this price. There's a good chance, or you take this area of resistance like this, there's a very good chance we see price reverse into the upside and break out higher in continuation of the current bullish momentum, bullish trend. This is something I'm actually expecting. This is how I'm actually expecting this chart to play out. I don't expect us to get a bearish breakout to the downside and fall the way down to this trend line, which is totally possible though, but I'm more bullish than bearish right now, and I'm sticking more towards the bullish case scenario than the bearish case scenario. So I just talked about the bearish case scenario for those who are interested, because there's some room to run if we do go down. First target being this price level, and second target being this trend line. But you would be much more profitable trading a bullish breakout because it goes in line with the current trend and our current market sentiment. Something else to pay attention is that if you go to the 4 hours time frame, for example, you will notice that this is a clear area of resistance. So GBP-USD was rejected at this area of resistance, so it may have a hard time breaking through this area of resistance. Something to pay attention to. So when you go long, these price levels could be a very good price level to take some profit off the table while you try to hold the rest of positions as we go higher. That's it for GBP-USD. Lastly, we're talking about EUR-USD. So EUR-USD, once more, I'm sorry about this, looks very, very similar to what we have on GBP-USD. Good bullish trend, price creating higher highs, higher lows, and right now we seem to be having some sort of pattern that looks like an head and shoulder. So head, right shoulder, left shoulder, but an extended left shoulder, right? Same thing applies. I am more bullish than bearish, but this one looks sumptuous, right? Because we could either come down and take out this neckline going low all the way to these lows before we bounce off again, continue of the trend, or we could simply just break out from this trend, consolidate a little, and continue going higher. So this is the bullish and bearish case scenario in my opinion. So for a bearish case scenario, when we take out this trend line, your entry is going to be after the breakout. Stop loss obviously is going to be around above the consolidation, this is the breakout, or above these highs, right? So when price goes up to this price level, then this pattern or this bearish case scenario would have been invalidated already. So that's a safe place to put your price target, your stop loss, excuse me. Take profit obviously would be on this trend line, or at least when we hit these highs, right, or these lows. So this is going to be a good range to place your take profit if this do happen, right? We could also see price stalling around this area of value, so these lows here. So something to pay attention to. So this is what you have to deal with when you try to trade against the trend. So now a breakout from this trend line looks like a very good trade, but we have this support level to hold price back. We have this price level to hold price back. We have this place to hold price back. But if you're going long, for example, there's only a few resistance to hold price, which is these highs over here. So when we get off these highs, then it's clear skies, we come to go higher. But for a bearish case scenario, just so many levels of support to prevent price from falling lower, and that's why you have to be careful going short in a bullish trend compared to just going long or looking for trade opportunities to go long in a bullish trend. That's it briefly for this week's analysis. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. And if you have questions or disagree with me, please leave your thoughts and questions in the comment section down below as well. That's it from me, guys. Once again, congrats to all the Liverpool fans out there. See you next week.